Good morning, Jenny Turner with Lovejoy Real Estate. Today we have the opportunity to talk to Ryan O'Leary, and we're going to talk all about crypto. This is really going to be Crypto 101, so welcome Ryan to the show.
Hi, thank you. My name is Ryan O'Leary. I am a commercial real estate broker here in Portland. I've worked with Kidder Matthews. I've been doing it for about 15 years, and I've been dabbling in the crypto world with regards to real estate for the last 3 or 4 years.
Which is pretty, 3 or 4 years is a lot, that's the beginning of crypto, right?
Yes, crypto has really broken out in the last 3 or 4 years with regards to real estate, but crypto itself started back in 2008, 2009 when the founding of Bitcoin through blockchain came to be.
So let's start really easy. Use some words: blockchain, crypto, sure. NFT. Give us just a little bit of a definition of those terms.
So blockchain is a term used for the technology that was built to protect digital assets.
Okay.
So it's supposed to be unhackable, it's supposed to be traceable, and you think of each block as a timestamp of ownership. And every time it is transferred from one owner, so if I sell you one block, then those blocks are linked together for eternity.
Okay.
And blocks will keep getting added to it, and it'll keep getting longer.
Okay.
And it has a history of every transaction.
So kind of like a digital deed or a digital legal record of ownership.
Absolutely. It is a title of ownership.
Okay. And then how does NFT relate to that?
So NFT is an acronym for non-fungible token.
Okay.
And these non-fungible tokens currently right now are, you might see small pictures online. And there are artists and creators of these small pictures who mint different NFTs. And they might mint 1,000 of them, or they might mint 20,000 of them. And
I would assume, depending on how rare they are more or less valuable.
Right. And what makes them valuable is the data that is stored within the blockchain that traces or tracks each individual NFT.
Okay.
Because if you think about it, you could go buy an original Picasso, and that is authenticated, and everybody knows that is the original one. Well, you could also take a print of one, not quite as valuable because you can print it a million times. Well, with each NFT, it has a unique identifier, which allows individuals to ensure that it is the original creation by that artist or the group that decided to mint these NFTs.
But it could be more than one original, right? Like it could be like, maybe using that same analogy, a signed copy and they only did 100 signed copies.
Absolutely, yes.
Okay.
And they will release, and they will have a number. It'll be 1 of 1,000 or 555 of 1,000. And some of them might all be the same picture, but some of them might just be, they might be a little bit different, but they could have a common theme.
Okay.
Now, there's only value if there's a marketplace for them.
Just like real estate, right? Somebody has to want to buy them and somebody wants to sell them.
And so you're getting these celebrities and you're getting these unique artists who are using their popularity to mint these, because you might get somebody like, I don't know, Paris Hilton or somebody who releases 1,000 NFTs on an online platform, and then all of her fan base starts to buy them. And then other people start to buy them because they see that there's a demand and they might be able to hold on to it and sell it for, a profit later.
Right. Do you find that most people who are investing in NFTs are doing it for that investment part of it, or are they really doing it because they want to have that thing by Paris Hilton?
Well, I think there's a little bit of both, but I think right now everybody's kind of investing in it because they see the potential growth. They're trying to get in on the early stages. NFTs really came to be, they really started breaking out in 2019, 2020.
Okay.
And then they really spiked in 2021 when you started having all sorts of celebrities and different sports teams, for example, like the Mavericks NBA basketball team. They released a series of NFTs. Now you have Nike releasing a series of Air Jordan NFTs.
Got it.
You've got different car brands like Ferrari that's going to be doing NFTs.
So although crypto started with Bitcoin, you said in 2008, 2009, kind of back there, the NFT is really a new chapter in that world.
Yes, and there's also additional, I guess there's additional technology that NFT could be used for. It's also it's a store of value,
Okay.
and so it allows people to basically lend out that value and then get it back if they want to. So it's almost like renting out something that somebody else can use. Like, let's say if you have a vendor that you don't trust and you're doing some overseas business, there's companies that are allowing you to lend this out so that they can use the value in that to go produce the goods or services that you've requested, and then they give back the NFT at the end of it.
Got it. So it is an asset with some actual value associated with it.
It's a digital asset, yes, and it has the blockchain technology, so it allows everyone to track and see who owns it and who should own it based on the proper protocol being followed if it were to be exchanged on a network.
Got it. So taking that and talking about a slightly different part of it, talk about the actual cryptocurrency. I know we just bought some cryptocurrency because I went and heard the CEO of Proppy speak, and Charles said, okay, we need to be part of this, we need to be involved with this.
Sure.
And we bought some Proppy and we bought something else that I can't remember. And so now we have $10,000 of this cryptocurrency.
Yeah.
And it goes up and down and up and down and up and down and up and down. And I think today I might have 9,500. I don't know. I bought it 3 weeks
volatile.
ago.
It is pretty volatile. So you have the original stable coin, the granddaddy of all the coins is Bitcoin, that started around 2008 and then started picking up a steam in 2013. You also have 9,999 other coins because people have started creating coins and they want to see these coins take off. So they try to they call it pumping the coin. So they get out there on social media, they tell everybody why this coin is good, what's the use for it.
Trying to establish some value because it only has a currency if there's some value there, right?
Right. And so the next kind of major coin, we call them stable coins. There's a handful of them, is Ethereum.
That's the other one we bought, Ethereum.
And so Ethereum was built after Bitcoin. It was built on a whole different, with a whole different set of rules. Okay. And so some people think Bitcoin is a little ancient because it was the first coin that was built. And every time you try to trade and transact Bitcoin, it takes a lot of computing power because they have to do basically math problems.
Okay.
And they do a number of them. And then but computer power takes energy, which costs money. So there's lots of transaction fees associated with it.
Right.
Ethereum is a little bit more efficient. And there's other coins that claim to be more efficient than Ethereum. And it just goes down the line. A lot of these companies are developed by, a lot of these coins are developed by private companies.
Okay.
And so there's a lot of companies that have taken the cash and ran.
Right.
So you have to be incredibly careful and you have to be willing to lose what you invest.
Hence we only did $10,000, right?
Yes.
Like, I mean, obviously I don't want to lose my $10,000, but it wasn't,
Yes.
my world wouldn't crash down, right? So
Exactly.
if you were, so like our Ethereum has been much more stable than our Proppy. And it sounds like that wouldn't surprise you based on kind of the evolution of things.
Right. And Proppy is probably a smaller coin with a smaller volume. Ethereum is transacting in the billions of dollars. I'm not sure where Proppy's.
So I don't know either, but I'll tell you why we chose that, because they have really entered the real estate market and the residential real estate market.
Sure.
So they had sold the first house in Florida on the blockchain. And it's interesting listening to the CEO talk about that. Essentially, they had a US corporation own the house, and then the NFT, when it was purchased that corporation. And since that corporation owned that house, they were able to just purchase the house with the NFT.
Sure.
Does that make sense?
It does make sense.
Good, because I wasn't sure it did.
I hear what you're saying. There's a couple different companies out there. There's one that is actually based in Florida called Millennium Title.
Okay.
And they're starting a company called Crypto Estates. And they are kind of the pioneers in putting it sounds like with property, putting some of these transactions together. So they're basically an escrow company. And right now, if you want to transact real estate with crypto, for the most part, you have to go through a company like Founder or BitPay. Which
we need cash, right? So you can have your Bitcoin, but you've got to make it into US dollar currency to be able to transact.
Exactly. Most owners today probably don't want to take a volatile payment.
Right.
So they all want the US dollar or fiat. So you have to go through a company like BitPay or Founder. Basically, that says if one party wants cryptocurrency, and that's like what they're sticking to.
Yep.
You basically have to go through your normal closing and escrow costs plus a 1% transaction fee on whatever that dollar volume is you're trading. So if you're doing $1 million home or $1 million building, you're going to have another $10,000 on top of whatever your escrow and closing costs are.
For the luxury of using your cryptocurrency.
Yes. Now there are companies like crypto estates that are being built right now, and they're trying to eliminate that by bringing in Bitcoin into the escrow process. So your traditional escrow company will have the ability to bring this crypto estates tool into their office, into their network, and say, okay, we can always trade, dollar to dollar, or we offer this new, suite of services which allow you to trade throughout any of the coins you want.
I was going to say, so that was my question, not just Bitcoin. It would be any of the currency that...
Any of the coins that are supported with the tool that they're building.
Yep.
So it'll probably be all the major coins and then a couple, oddballs.
So as you're looking at this and you're thinking about this, and obviously you're very involved in the commercial side, what do you think the future is going to hold for crypto and real estate? Like, do you see this being a big part of the player?
I see individuals using their retirement accounts to purchase crypto and to hold it there and to transfer back and forth between real estate and crypto easily and use it as a way to hedge themselves against the inflation of the dollar. So right now, if you're keeping all your cash in the bank and we're going through 7 or 8%
Right.
inflation, then your dollar's getting weaker, every day. Crypto, the major stable coins, have for the last 10 or 12 years beaten, well, I guess maybe take that back. For the last 7 or 8 years have beaten, most of your major indexes like the S&P and the Dow.
Got it. So even though it's volatile, it has trended up.
Long term, it is much more stable and it's had better growth. On a day-to-day basis, it's up and down. So if you have short-term anxiety, it's really going to be tough. But if you can stick it out, and what they say is hold or hodl, somebody spelled hold wrong, and now that is caught on, and it's kind of like just a thing in the industry.
Okay.
If you can hold out, then you're going to see long-term growth, and that has been proven for almost a decade now.
So really, you could hedge inflation with crypto. You can also hedge inflation with real estate, right?
Yeah.
Because real estate is appreciating, generally speaking, faster than the inflation is happening. So just another tool in your portfolio to be able to hedge inflation and invest.
Right, and you can do that with your general savings and your personal investments. You can also do that with your retirement accounts. So like a self-directed IRA can do that.
My self-directed IRA could buy crypto.
Yes.
Interesting, because my self-directed IRA could buy real estate too.
Absolutely.
Right? Interesting.
And then you could use that to buy, you could use your crypto and your self-directed IRA to buy real estate, and you kind of transfer back and forth. There's companies in town here in Portland like Equity Advantage, Dave and Tom Moore. They facilitate buying crypto with your retirement.
Okay.
There's one thing that you can do with your crypto, and I've been doing it a little bit, is you can lend out your crypto through, there's a couple different terms for it, but DeFi is one. I'm using a company called BlockFi to do that.
Okay.
And basically, they have their wallet, or you sign up and you open a wallet on their platform, and I send my crypto, so I send a bunch of my Ethereum over to this company, and it earns a percentage if you store it there, because then they lend it out at a higher rate.
Right. So kind of like a higher interest yielding savings account for
Correct.
your crypto.
And so, yes, so I'm getting 5% on my Ethereum there.
Got it. And if you kept it just in your own world, you wouldn't get anything.
You would get the appreciation as the market, as the Ethereum, as that coin moves up and down with demand.
And when you lend it out, do you also get that appreciation, or now would they get that
No,
appreciation?
you still get that appreciation.
Okay.
It sits there, but what they're getting is to use your money, just like a bank would, to use your money to lend it out to other people who might need a loan. You know, it could be a bridge loan, a quick loan, a hard money loan. They're using it however they've found a demand to.
Do you think that makes your crypto even more volatile? Like, is that for a owner of crypto, is that you being a little even extra risky?
It is, and so there are cases where there are companies who have overlent and they haven't been able to give the money back to the original coin holder.
Right.
There's a lot of regulations right now that are being written on a daily basis because they're trying to figure out how to kind of just corral this industry, because there's a lot of cowboys out there who are just trying to make a quick dollar and get one over on the little guy. There's also, kind of parlays into the next topic is you have to be careful wherever you store your coins.
Right.
You can store them on like Coinbase.com, probably the most popular crypto website that we have, which is actually based here in Portland.
Okay.
They're pretty safe. They've got some FDIC insurance with that, I believe. But then you have other exchanges that might offer better rates and faster transaction times, but they are located overseas. And there's examples that you can find, like Mt. Gox in Japan.
Just gone. Because
they got hacked. And there's also an example where some guys in Turkey who had this $1 billion exchange website that they just basically picked everything up and took off and went somewhere else in the world. And the whole idea about it is that it's cryptic.
Right.
You can't find them. You don't know where it went. And sometimes they can do a little bit of forensic, science and go track everything down and get it back. But a lot of times you're out of luck.
On the same subject, but slightly different, talk to me a little bit about metaverse.
So metaverse is going bonkers right now. I am not on the metaverse. I haven't got into the metaverse yet. I've been reading about it. Metaverse offers entertainment, it offers gaming, it offers real estate. It is a virtual world, and you don't necessarily always have to put on an Oculus headset to participate in the metaverse. You can buy, just like you can buy NFTs, there are different metaverses that set up these basically worlds, and think about it like a grid system, and you might buy a little square. And that might be your little piece of land.
In the metaverse.
In the metaverse. And there's, for example, one of the first ones to start up was Decentraland. Okay. And if you remember the old SimCity games, and they had this big grid and you'd put little buildings there, well, that's kind of what they do. They built what I would consider like a SimCity, and you can go in there and you can buy one square for however much somebody's selling it for, and it could be a couple $100, it could be $100,000. Or you could get an assemblage of blocks and buy a big swath of land.
Right.
Decentraland has a bunch of preset buildings that you can pick and choose, just like in SimCity, and drop them. But there's also other creators who are designing their own virtual homes. So there's virtual architects that people hire because they want it to look a certain way.
Are there virtual real estate agents?
There are virtual real estate agents. I'm not exactly sure how to become a virtual real estate agent yet.
When you figure it out, you let me know, and I'd like to be one too.
The Lovejoy virtual real estate team.
It's just so interesting, right? And my 15-year-old understands that.
Yeah.
But it's figuring out how to get your mind around that, and what does that mean, and why do I want to own land in this metaverse, and do I want to own land in this metaverse, and I don't even know if I want to or not.
Right. I'm still scratching my head a little bit on this one. The only reason I could see jumping into it right now is to be on the forefront of it and take a little risk from that approach. It's an investment. Right. So if you can get through the idea of not like some people think spending their whole lives in a virtual world, it sounds a little too futuristic or too, taboo, kind of insane. But if you think about it as more of an investment, this is something I need to participate in to continue growth, for the other parts of your life.
And that's why we're talking, right? Because it's happening.
Yeah.
So whether you understand it or not, whether you participate or not, it's still happening. And so I like that being on the forefront. I like paying attention. I like understanding the language. I like understanding the knowledge.
Yeah.
And then what does that look like, and how do we go through with it?
So, with metaverse, it's one of those. It's emerging right now every day, and it's.
Right.
I'm a little bit lost with metaverse overall because I just don't understand being able to take that much of your savings. Or maybe some of the people just have a little bit more savings than I do, but I've been tracking some of these sales and they're in the hundreds of thousands of dollars, if not millions of dollars.
Wow.
For a little digital piece of land. I just don't understand where the demand is coming from because I feel like people have so much other daily parts of their lives to account for that, we're already trying to invest in crypto. We're already trying to invest in stocks. We already have other retirement accounts to build. And then you get into the metaverse and I got to go buy a $200,000 virtual home and I'm trying to pay off the one I got.
Right, the actual house, yes.
So yeah. I know it's there. I'm not the pro at it yet.
I think we should do this and talk again in 5 years.
Yes, absolutely.
Right? Because that's going to be a whole lifetime in this category of the world.
I might be renting a metaverse house.
Right, by then.
Which is the thing. People do rent out. So people do rent out.
Wait. I could buy a metaverse house.
Yes.
I could then rent my metaverse house out to somebody else.
Yes. And the reason why you might do that, for example, Paris Fashion Week is going on. And so they built a virtual Paris Fashion Week. Well, they built it in a certain area where you can kind of virtually walk through and explore. And it's part of their marketing plan. So you can get online into their world and you can go through. And then there's brands who will rent spaces to put up Gucci
if I happened to have owned something where they did that, my property would have had more value.
Right. And I think I'm not exactly sure how it was all laid out. And I'm not sure if it's like being on Las Vegas Boulevard or being, 10 blocks off the strip.
Right.
That I don't know yet.
Right.
I actually have not visited the Paris metaverse yet.
There's time.
I know, there is time.
So one of the interesting things about the property transaction, and they had done, their first real estate that they sold was in the Ukraine. So they sold a house on the blockchain in Kyiv. Then they did their second one in the US, more complicated, bigger rules, more regulations around real estate, right? And like the average residential real estate transaction, it takes us about 30 days, right? There's title reports and loans and all of these kinds of things. Well, Proppy set it up where Proppy did an auction for this house, 3-bedroom, 2-bath house in Florida. I don't know exactly where it was. It was a little ranch. I saw a picture. And you could bid on it on an online auction. Mm-hmm. And then when it came time to buy it, the auction closed, the winning auctioneer bought the NFT with their cryptocurrency, and that NFT was tied or related or owned to the U.S. corporation, which owned the house. Does that make sense?
It does make sense. And so I imagine that the NFT had some unique identifier that said, this is tied to this literal physical piece of real estate, which they somehow linked the deed between those two.
Yep. And so if I wanted to buy an NFT, how long does that take me? Can I do that in 2 minutes, or what is that?
As fast as you can set up an online account and deposit your cash in there, you have to, so that's where it's getting to the point where you still have to make that link and make that direct deposit to your bank. So,
but what if I had $300,000 of Ethereum sitting in my online bank?
Yeah.
And I wanted to take that $300,000 of Ethereum and buy that Florida house. That's just a minute, right? Or not even?
Theoretically, yes. It's almost instantaneous. There are checks and balances when you're transferring any of the coins, and they have to basically be verified multiple instances.
Okay.
So they will basically wait for this network of computers to verify the transaction. And basically, they might have different levels. So it might have to be only 10 times, or it could be verified 100 times. And that's based on the security kind of levels that they want.
But still, we're not talking 30 days.
Nope.
Right?
It's generally, minutes.
So really, as we go through this and we see crypto being more and more common in real estate, that's probably going to affect the speed of our transactions, right? It could hypothetically take minutes or days versus 30, 45 days.
Where I see a benefit is in the escrow process, and especially at closing, or if you're making an earnest money deposit. No more 1:30, 2 p.m. wire cutoffs with the bank. Somebody can initiate it at whatever hour of the day. And there's no more verifying checks. No one's sitting on a check for a 7 to 10 day hold because
making sure it clears.
You have grandma's checkbook, and you're not sure if that's gonna clear. So it's like yeah, exactly.
So are you seeing this in the commercial real estate world? Have you had transactions?
I have not participated in one. I've seen some articles and read about a few of them, but I have not personally participated in one. And I don't think that there's too many offices, at least here in the Portland area, that will facilitate those. I think you're going to have to go find. There's an office in Texas and based in Florida that I mentioned earlier, the Millennium Title. They will. They're in 23 different states. They will facilitate a crypto transaction.
So right now, if I'm in Portland, Oregon, and I want to buy commercial real estate, I have to make my crypto into US dollars and then give that to title, right?
Right. And so basically what you're going to do is use a company like bitpay.com or founder.com, and they will do the conversion of dollars to crypto or cryptos to dollars, depending on which way the buyer and seller both want to go. But you're going to be paying that additional cost. So no matter what, you're going to get a 1% transaction fee on top of the amount, whatever the net proceeds are.
Which might make sense if I have a lot of my assets tied up in crypto, right?
Sure, yeah.
Depending on what I want to do.
Absolutely. It's just, it's another fee, but it is a route that's available. And so that will start coming down.
Do you think it's going to be more common that you would use, like, the hypothetical person who owns crypto would use that crypto to buy things digitally versus taking that money and buying a house or a commercial property?
So are you talking about like buying a cup of coffee?
I mean, maybe. Is it better to keep it in the online world versus trying to get it back out into the everyday Portland, Oregon world?
So there's a lot of companies out there trying to mainstream crypto into your everyday lives, and so they're developing, crypto credit cards. They're developing merchant pay systems,
like Apple Pay, but with crypto.
Right. It's backed by whatever coin that you have loaded onto that card. Personally, I'm not a seller of it. I feel like it's still so in its infancy that I'd like to keep and hold it, because I feel like I'm kicking myself if 15 years from now, the cup of coffee that I bought is now worth, the price of a new car.
Right. So as an investor for your own personal portfolio, you're buying and holding crypto.
Yeah. There's a story of when when Bitcoin was just getting started. There's a guy, a pizza delivery guy, who accepted, today sounds like an absurd amount of Bitcoin in lieu of a pizza, from the guys who were on the forefront of developing Bitcoin, and they had, thousands, hundreds of thousands of these things, and so they were handing them out like candy because they had no real value back in the day.
The demand wasn't there yet.
And so they call it I think it's like the $12 million pizza, because the amount of Bitcoin that this delivery driver took for the pizza he dropped off was, at the time when that article was written, was like $12 million. And it's probably more today.
Right.
So,
and do you know if he held it or did he cash it in?
I think it's kind of also a myth and an urban legend.
It's more the idea of it?
Yeah.
Yeah, I got that. Ryan, thank you so much for coming. If you have any questions out there about crypto and real estate, the metaverse, reach out. We'll do our best to try to answer it. Jenny Turner with Lovejoy Real Estate. You can reach me at 503-312-4642 or jenny@lovejoyrealestate.com.
Jenny, thank you very much for having me today on your podcast. It was lovely. I'm Ryan O'Leary. If you have any questions on crypto or commercial real estate, feel free to give me a call. 503-453-9124. Thank you.